Buckle up, everyone. You are strapped in and ready for Insurance Hour with me, your host, Karl Susman. Informing, educating, and entertaining, one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. We have got a full show today. We are going to be talking about your favorite topic and mine, all things insurance related. Be sure if you have any questions, give us a call, and we're happy to take your calls live, answer them for you on the air. If you don't get through, leave a voicemail. We will get back to you and or play your question on the air. The number is 559-656-0317. You can call or text that phone number. Also, if you'd like, you can send your questions in by email or just contact us anyway at questions@insurancehour.com. Having said that, let us just dive right in. Let's look at your questions. I've got lots of them that have come in by email. Let me read through them for you now. As always, I have not pre-read these questions. I'm going to give you my best answer right off the cuff. So let's begin. This is from Crystal. She says, my parents are moving in with me for health reasons. Is it even possible to include them on my existing insurance? They no longer have a separate house, so I'm wondering if there's a way to combine everything into one, or if that's not how it works. Okay, this is a great question, and we're seeing, I think they're calling it the sandwich generation, if I'm not remembering incorrectly, where parents are living in the same house as their kids, and sometimes there are kids that are having kids, and they're all in the same house as well, so you've got it. You get it, sandwich generation. You've got the generation with the parents in the house and the kids. They're in the middle. Okay. Anyway, I'm trying to stay on topic. So here's how it works. First, you're saying their parents are moving in for health reasons. I hope they're okay. My thoughts and strength is being sent to you. It's never fun when you have aging parents. It's one of those things where you want to do everything you can, and at the same time, it can take over your life if you're not careful. So letting them move in with you is a big step, and hopefully that's the right step for you and the right step for them. Insurance-wise, you're going to have a pretty simple fix for this type of thing, and that is to list them as occupants of the residence, right? So there are certain types of coverage that is afforded to people on a homeowner's insurance policy, or any type of property insurance policy for that matter, homeowner, condominium owner, renter. And there are rights that are afforded to the named insured, the first named insured, family members, resident household members. You see where we're going on this. You want to add them on so that they are listed as household members. Now, your policy might be a little more unique than that. You might be able to list them specifically as parents. That might give them more rights under the policy. Remember when I'm saying rights under the policy, I'm talking about coverage, right? Their personal property. Liability protection that would include them, things like that. You want to talk to your agent or broker, find out what the best way is to do that. But the good news is you should be able to add them on there in some fashion or another. So again, best of luck with that. And I hope everything works out well for you and for them. Next question, Gavin. We live in a region that's had some wildfires in the last few summers. How can I be certain my plan won't drop us after a major wildfire or raise our rates? Okay, Gavin, this is a tough one. I would have loved to know where you are, because I know that most people, when they hear wildfire, they think, oh, that's a California thing. There are actually wildfires in practically every state now. And I remember reading something not too long ago. Connecticut, go figure, had some 30 or 40 some odd wildfires that burned so far for the year. Just crazy amounts of destruction coming from fire in areas that we do not normally associate with fire. So now when you're saying the program won't drop you, I'm assuming you're talking about an insurance policy. But when you say plan, then I'm thinking maybe you're talking about a state organization like the California Fair Plan or some other fair plan that's in place. Now, fair plans in general are organizations that are created in a state-by-state basis to help obtain fire insurance for people that are in areas that the private market does not want to insure. Fun fact, the private carriers are the ones that are paying the bills for the fair plan, but that's a whole other topic. So to answer your question, anytime you're in an area where there has been a loss, and every time your policy comes up for renewal, the insurance carrier or plan is going to look at your risk and they're going to assess it. Now, if it's a fair plan type of policy, and you're already there because of fire risk, then the likelihood is you should not be too concerned about them non-renewing you for fire risk. Now, if you're with a private insurance company, they're not under any particular obligation to keep your policy if there's a change, a material, I believe the verbiage is a material change in the exposed risk. So unless something has changed significantly, like your house has been moved somewhere closer to brush, then that typically will not qualify as an event that would be a significant change in the risk exposure, right? So you shouldn't be too concerned on the surface about being non-renewed if there have been fires in your area. But if the area has become a high wildfire area, right now the guidelines have changed, the maps have changed, the exposure has changed, and it's turned out that now you're going to be seeing a lot more fires in that area, then it is possible that you might actually have either a change in rate or need to look for a different insurance company. Insurance companies are not stupid, right? They love the risk as long as they understand the risk. But if the risk changes, if all of a sudden an area that they did not at some point think was going to be high risk for fire turns into that, then they're going to do we have to either change that product, we have to reprice that product, we have to change something about it, or we have to back out until we're able to turn around and find a product to afford it. So keep your eyes open. And again, depending on if you're with a plan like the FAIR plan or a private carrier, that would determine whether you may or may not be looking to have an issue with your policy. Next question. Hi, I built a tiny home on a trailer frame so I can move around easily. Most traditional providers don't know what to do with me. Is it an RV or a mobile home, and how do I get coverage? Wow, that's a great question. I would say that a tiny home on a trailer is probably going to be categorized as a mobile home. But as you have found out, each insurance company is going to view this slightly different. So you're going to have to go to probably an independent broker that has options with many different companies and ask them. Say, look, I'm looking to get coverage for my personal property and for this structure. What products do you have with which companies that will do that? Find out which ones will give you the right product and go about it that way. It's an interesting situation. I've not heard about somebody doing that. So we're going to be taking our first break. When we come back, I'm going to be addressing a question that was asked last week. It had to do with a loss to a service animal. So if you missed last week's show, go back and listen to it or watch it on YouTube or on a podcast or Spotify or iHeart or Pandora or wherever you get your stuff, because I'm going to be addressing that question again, and then we'll get back to your emailed in questions. So give us 60 seconds and we'll be back with more information for you. This is Insurance Hour, and I'm your host, Karl Susman. Sit back, relax, and we'll see you in 60 seconds. Let's talk about earthquakes for a minute. Look, we know we live in earthquake country here in California. Powerful, devastating earthquakes have happened here before, and science says that they will happen again. They can't tell us exactly when, they can just tell us that it is going to happen. Count on it. Prepare for it. Did you know that earthquakes are not covered by your homeowner's insurance policy? You need a separate policy to give you the peace of mind that you will be able to recover without getting financially wiped out the next time we get hit with a big one. There is a great company here in California that will provide you with earthquake coverage you need at a price you can afford. That company is GeoVera. I have a policy through GeoVera. I really like how easy it is to choose from all of their great coverage options, backed by the financial strength that lets me know that they will be here for me when I need them the most. Go to getquake.com/insurance hour to learn more. That's getquake.com/insurance hour. Make sure you're ready for the day when the ground shakes again. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today, learning about all things insurance. I know, your absolute favorite topic known to mankind. Before I jump in, I want to thank our sponsor again, GeoVera Insurance Company. As you can imagine, I can get my own earthquake insurance pretty much wherever I want. And every insurance company that offers earthquake insurance wants me to have my policy there so that I can tell our customers, hey, this is where I have my policy, so you should as well. Turns out I've had my policy with GeoVera for decades now. So I go to them because they are a financially solvent company. They have lots of good products and their prices are competitive. So suggest you check them out as well. Go ahead, go to insurancehour.com. You'll see a link for getting quotes from GeoVera for earthquake insurance. Give them a check them out, see what you can come up with. I got to tell you, if you're anywhere in this country, probably anywhere in this world, you could be exposed to an earthquake. So it never hurts to get that quote, see what the cost is, have that peace of mind. Okay, we are going to continue now. We have the phone lines open, 559-656-0317. Call or text that number, or you can send us an email to questions@insurancehour.com. Before we get back to your questions, I want to do as promised. We had a question last week about what type of coverage is there for a service animal on a homeowner's insurance policy. Now, my mind, of course, initially went to, well, what if the service dog hurts somebody? But that wasn't the question. The question was, what if something happens to the animal? Is there some type of coverage that's available on homeowners insurance policies? That did not have what I thought was a decent enough answer. So I did a little bit of research, and I have the following to augment that answer from last week. Now, service dogs are specialty animals, for those of you that aren't familiar, that help people with different health conditions. It might be for somebody that has some type of seizure disorder, and the service dogs are amazing, can probably smell on the person when a seizure is about to come on, and they will actually let the person know so they can either sit down or if they're driving, pull over. They're also used a lot of times for people that have mental health conditions, and the service dogs can be extremely useful for those people as well. Service dogs are just a very strong piece of the health puzzle, and they are being utilized more and more over time for different health conditions. So finding out what type of coverage you can have for the animal is a legitimate question. Now, typical homeowners insurance policies, we like to call them unendorsed, meaning policies that have not been manipulated in some way with a specific change, do not have any type of coverage for service dogs, other than the fact that, as I mentioned earlier, they are considered property. So if there's a fire, God forbid, or there's some type of theft, you would have coverage for that. But you are not going to be able to get the dollars that you would need to be able to get another service dog, right? And especially if you have a specifically trained service dog and you do need to be in a position where it needs to be retrained, you can be looking at a long period of time as well. There is not coverage that I was able to find with any insurance company that is specifically tailored for this type of a loss. So what do we do when we want coverage for something and we don't see it in any particular type of product that already exists? We go to an independent broker. We tell them to go usually to Lloyd's of London or to go to some other carrier that specializes in unique exposures and find out if they can do it for you. Now, these types of policies are very unique. You will find that certain superstars and celebrities will purchase insurance policies that will cover them in certain ways. For example, there was a policy, I believe it was on Barbra Streisand, and it was on her vocal cords. Well, certainly not going to be able to go online, search for vocal cord insurance and find a policy for that. But she was able to get a policy for that at the height of her popularity. There's also been policies on many sports stars, people that are extremely high paid sports stars. And maybe it's I think I just saw this, the highest paid athlete just was given a contract, I believe it was $100 million or some crazy amount like that in baseball. My guess is that they also have some type of an insurance policy that's in place that probably insures his arm, literally, if not more. So there are products that can be put together that are specifically tailored to different types of need. Service dogs is a unique need at this point. So again, if you're looking to get coverage for that, find out about getting a specifically created or tailored policy. And that is my best advice for you at this time. And again, I thank you for a terrific, terrific question. Anyone who didn't hear the question, you can go check it out last week. It was we had an email that I read, and that question was introduced. Let's get on to the next one. Next question is from Jacob. I have an old collector's car. I only drive it on the weekends. I'm laughing. I'll tell you why in a second. It's probably not worth a ton of money, but it's sentimental, and a piece that I love. Is there a way to approach insuring this vehicle? Okay, few things on here. First, classic car insurance is a thing. That's the good news. So there are policies that are designed specifically for cars that are not the usual, in the last 10, 15, 20, 30-year cars that you can jump and do the drop down, find the year, make, model, VIN, and move on from there. We're talking about cars that are usually many decades old, or they were one-of-a-kind cars, or they're cars that aren't being made anymore, things like that. there are policies for that. The carriers might ask you to prove certain things, like that you have the vehicle, what the appraised value is. You might have to get an appraisal on it. You might also have to show if the vehicle is registered for everyday use or if it's registered for parades. There's different types of registrations and ways that cars are licensed with the Department of Motor Vehicle. So depending on the policy you get, one might be better or one might require you do one thing or another. Now, you're saying you only drive on the weekends and it's sentimental. So here's the problem. There are not really good policies for sentimentality, unfortunately. So the car might be worth a ton of money to you because of where it came from. But if you can't get an appraiser to look at it and say that it's worth that much to somebody else, and then you might have a real problem trying to get an insurance company to reimburse you in the event there's a loss if it's only that value to you. You unfortunately can't arbitrarily pick a number of something that's near and dear to your heart and get a carrier to pay you that amount. There has to be some type of marketability for you to be able to get a policy like that. So check on a classic car policy, get the vehicle appraised. You're going to need that almost certainly with one of the policies that you get, and be prepared that you're going to have some type of proof provided that shows what type of classic car it is. Again, are you driving it just on the weekends? Is it just in parades? Is it parked with a diaper like in Ferris Bueller's Day Off? What's the scoop with the car? You're going to have to provide all of that information. But like I said, the good news is not unusual, not unique, and there are many options that are out there for you to be able to get coverage. And guess what? There are many more questions we have to answer. Let's take another quick break. When we come back, we will get to your questions. This is Insurance Hour. I am your host, Karl Susman. 60 seconds, and we will be right back.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today and learning about insurance. I know it's the most exciting topic in the world. Who wants to watch Mr. Beast and someone who spends $20 million to produce a video when you can just get me sitting and talking about insurance? What could be more exciting? Yeah, I know, but you need to learn. These are things that are important. Insurance is not as simple as it used to be, and it's getting more complicated. It's more important than ever that you do find a trusted advisor that can walk you through the complexities, help you be sure that you are getting the coverage that you want, that you need, and that you believe you have. That's a big one. A lot of times you might think you have the right coverage, but surprise, surprise, you may not. So take the time, make friends with a good agent, a good broker, somebody that you can trust, and make sure that you're getting the coverage that you need. And of course, keep listening to the show, because we're going to be giving you generic advice, some more tidbits, some more tricks of the trade, some ways to help you interface and speak the same language as your insurance professional. With that, remember the phone lines are open, 559-656-0317. You can call or text that number, or you can send an email to questions@insurancehour.com, and I will jump on that and get back to you right away. Let me know if you want me to read the question or if you want me to put the voicemail, if you leave one on the air, what you want to do, just let me know. On that note, let's get back to the emailed questions. This one says, I just bought my first electric car, and the battery alone is worth thousands. Yeah, it is. If the battery gets damaged, but maybe something happens to it, not from an accident, is there a way to get coverage for that? Wow, that is a terrific question. The answer is pretty simple. I am not aware of any auto insurance policy that is going to pay for a degrading battery. And that stinks. I get it. because that is probably one of the most expensive parts of the vehicle to wear out. But that is just it. Batteries wear out, just like the tires wear out. And that is not something that you can buy an insurance policy for. And it's probably not a bad idea to take a step back for a moment and explain why. Anytime there's something that we want to have from an insurance policy, and I give you an overwhelming backhand, no, you can't, I want to maybe step back and explain why. It's not because the big bad evil insurance companies don't want to do it. Believe me, if an insurance company could find a way to characterize the risk of a degrading battery, find out what does it cost, how frequent does it happen, what would it cost to get a replacement battery, what would it cost to get a brand new battery, all sorts of things that go into product creation, they would absolutely do it. The problem is, insurance is designed to cover things that are unexpected, okay? That is an important facet to insurance. You wouldn't buy an insurance policy. A carrier could not make money for the most part selling a policy if there was a near certainty to there being a claim, right? When you buy a policy, you're hoping, not really, but in theory, that you have a loss the next day because then you've paid a little bit of premium and you get all this money back from the carrier. The carrier is hoping you never have a loss and you pay premium forever, right? So you've got this dichotomy that's going on. And I say kind of because obviously nobody wants to have a loss. But dollars and cents wise, that's a lot of the way a lot of people think about things. Now, an insurance policy can't exist when there's going to almost certainly, or in the case of a degrading battery, guaranteed be a loss that's happening. We know that these batteries degrade over time. I have an electric car myself. I've watched the miles tick down every so slightly every year. That's a thing. We know that happens. It wouldn't be possible for a carrier to come in and say, well, if the battery degrades, we'll pay XYZ, because there is no if. It happens. So I would be, in essence, they would have to charge a premium such that it would basically be pre-funding the loss of the degrading battery that they know is going to happen. Why would we do that, right? Why would I want to take money from my account, put it in the insurance company's account, just to have them turn around and give it back to me at a given time? They're not going to be paying me interest on it, that's for sure. I'd be better off to just keep the money in my own account. And this is one of those issues with insurance policies in general that people need to be aware of, is that you have to have the expectation when you're buying a policy that you're buying it in the event of something unexpected and something that's unexpected and categorically recognizable happening to trigger coverage. Not, oh, you know what? I think maybe my roof's getting a little bit old now. It hasn't been replaced in 20 or 30 years. Yeah, let me get a new one. Well, no, carrier's not going to just pay for a new roof because your roof is old. Now, I understand the argument. Well, wouldn't they be better off to do that than wait for a storm and then there's damage from rain and they have to pay for the damage that caused? I get it. That is the nature of the beast. They just don't, that's just not the way it works. Think preventative care for health insurance if you don't, if you need any more examples of what I'm talking about. So you have to have something that is not a certainty or a near certainty to happening. This is actually one of the reasons that the insurance industry in general is having so much trouble right now, because in the past, we would have large weather events in this country in different parts, whether it be tornadoes or hurricanes or earthquakes or wildfires or hailstorms or floods, you name it. We have them, right? Just depends on where you live. And the industry was able to say, all right, we can see actuarially how often this happens. And we can price our models, we can price our products to take that into consideration so that we know that, okay, we're going to see a massive event like that happen every X number of years. The problem is with things like climate change and other things that are going on, those predictive models are not that look backwards in time are just not working anymore, because we're seeing such an acceleration in the volume of claims because of weather-related events, for example, that the old way of looking at those predictions is simply not working. It's not working in a bad way. So you'll find in many states, the insurance industry is very, very tight. We call it a hard market, meaning that it's hard to get an insurance policy. The carriers actually have maximum exposure amounts that they're willing to take because they have not yet figured out how to comfortably predict loss. Remember, if you can't predict the loss on some level, you can't create a product to sell insurance on. It doesn't work. You have to be able to have an idea of the frequency and the severity of the loss before you sell a product. Otherwise, how do you possibly price it? You can't just say, let's go with $500. There's a lot that goes on. I would love to have an actuary on the show one day to be able to tell you just how in-depth their research is when it comes to how they go about figuring out how to price a particular product. And then after they go through all that, you've got other actuaries doing the same thing that come up with different prices, and then they start competing for prices to try and get the business, and then the prices go down. I mean, it's really an amazing industry when you stop and look at it on the macro level. But speaking of the macro level, you know what that means. We have to get to our sponsors. Another 60-second break, and when we come back, we'll get more of your questions. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here.
Have you been dropped by your insurance agency or seen your premiums skyrocket? Susman Insurance is here to help. We're a family-owned and operated insurance agency that's been serving our community for 2 generations. At Susman Insurance, we know how stressful it can be to find the right coverage, especially when prices go up or you're left without insurance. That's why we're committed to finding you competitive rates, whether it's for fire, home, earthquake, flood, auto insurance, you name it. We've got you covered. Give us a call or send a text to 310-820-5200 or visit us online at sussmaninsurance.com. Plus, stay updated on all things insurance by joining our text group. Just text 567-4CARL with a K. That's 567-367-5275 to get the latest updates straight to your phone. Susman Insurance, your family's insurance solution.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me today. We have a bunch of calls and emails and questions and answers about your favorite topic in mind, insurance, to go over. So be sure that you strap in, sit down, and get ready for more. Phone lines are open, 559-656-0317. You can call or text that number and send your questions in to questions@insurancehour.com. Right now, we're going to jump right back into the emails that we have. And let's see, remember, if you have a question, someone else likely has the same question as well. That's just the way it works. So let's see what we have next. This one is about, it looks like a vacation home. I'm considering putting my lakeside cabin up on a rental site when I'm not using it. Could that cause any problems with my current insurance plan? Blah, blah, blah. Okay. We've talked about short-term rentals on other shows, so I'm not going to get into a ton of detail about it, but let me give you some general guidelines. If you are renting out your house, second house, primary house, rent doesn't make a difference. If you're going to be renting out any property that you own on a short-term basis, it will absolutely have an impact on your coverage, and you need to have a very specific type of insurance policy to do that. Do not bury your head in the sand and just say, oh, that's all right. I just won't tell my carrier and I should just have coverage because, don't ask, don't tell. It doesn't work that way. Policies are designed, homeowners policies specifically, if that's what we're talking about, for you to live in them. If there's a policy as a secondary home or a vacation home, it's assuming that you're the one that's going on vacation there, not strangers that are there for a few nights. So the simple answer, talk to your agent or broker. Be sure that you get a policy that is designed to have protection for a location that is being rented out on a short-term basis. Also, side note, don't rely on the short-term rental company to provide insurance for you. They will provide coverage for themselves, and there might be some bare-bones coverage for liability that they might extend to you. But, for example, they're not going to cover the house if it burns down. It just doesn't work that way. So beware, be informed on that stuff, right? All right, next question. I'm moving to another country for a year and will be shipping furniture and personal items. If the shipping company loses or damages them, do I need to get reimbursed from them or my insurance company? Okay. Moving your stuff. Now, when you move your property, you're going to have some type of coverage because there's a lot of exposure going on, right? Your stuff is out and about. The bad news is, unfortunately, that homeowners insurance policies, if that's what we're talking about, in general, they will not give you coverage for all of your stuff breaking, right? they're not going to give you coverage for your stuff if the movers are careless, or even if they're not careless, accidents do happen. So you are going to want to purchase the insurance from the moving company. It doesn't tend to be the greatest coverage, but if that's all you can get from them, then at least take that. If you have specific items that you want to be sure are protected, then look to get a specific sides or secondary policy to cover just those items. If you have fine art, if you have things that are breakable like that, then go about taking the time to find out what it would cost to actually get insurance for those items. And I would not recommend necessarily that you just rely on the moving company for that. Check yourself. If it's something that's important enough, then you want to take the time yourself. Don't take the shortcut, because you know what? I've heard stories about this. Moving stuff is just difficult. There's no two ways about it. It's one of those areas where if there could be a shakeup a little bit in products and the insurance market for people that are moving, I could see there being a necessity, or certainly a market out there for an insurance company to come in and say, look, you tell us how much stuff you want to get protection for, what type of coverage you're looking for, fire, theft, breakage, you name it, loss, whatever it might be, and coming up with a product for that. Because I hear stories about this, and people buy coverage from the moving company and it's not great. Or they assume that their homeowner's insurance policy is going to cover them for things that it never has, so it's not going to all of a sudden cover for because things are being moved. So be careful. Take time in advance to be sure that you get the best coverage that you can for the price that makes the most sense to you. You can tell I'm not a huge fan of this particular sector, because it frustrates me, because I don't have a good answer, right? If there's not a good product out there, it makes me squirm. This is kind of one of those times. So beware. Next one. I just got to get to the next question, please. Leaving my house unoccupied for about 6 months. I'm going to be traveling. I've heard providers will cancel you. What do I do? Okay. This is a great question as well. Now, homeowners policies, I keep saying homeowners policies, and you know, when I say that, I'm talking more generically about homeowners policies, condominium owners policies, and sometimes even renters insurance policies. Basically, your home, right? Where you hang your hat. That's what we're talking about. Now, it's a product that's designed around you living there, right? Certain things are less likely to happen with you living there than when it's empty. Let's just take vandalism, right? The chances of somebody coming and graffitiing your house, is that a word, graffitiing? I think so. Your house is less likely when you're home than if the house is empty and there's 50 newspapers on the driveway and clearly there's nobody there, right? So products are designed around their exposure type. Homeowners policies are designed around having you live there. If you are not going to be there for a period of 6 months, then you need to talk to your insurance company and have an endorsement, which is a change to your policy made, or you might have to have an entirely different product put into place while you are gone. I know it's not the most convenient thing in the world, and I know what you're thinking. Oh, it's going to cost more money. Well, it's a different exposure, right? If you had to put your own money behind something, what do you think is less likely to have a loss? So a particular house that someone is living in, or a house that's empty? Obviously, when you've got eyeballs on the house when you're living there, it's less likely to have a loss. If a pipe breaks, you're going to notice it and turn off the water before it causes tons of damage. If it's vacant and that same pipe breaks, it could be hours or days before the water is turned off, and it could be a catastrophic type of claim. Same thing for a fire. There might be, an ember that flies from a neighbor's chimney. If you're not home and your house starts to smolder, no one's going to be there to take action. If you're there watching, you would do something right away, right? Grab the garden hose or whatever the case may be. So it's a different exposure when your house is empty, and it's annoying, it's frustrating, because yes, it's probably going to cost more money to have a policy in place while the property is vacant, but try and have the understanding. You can be annoyed, it's annoying. Spending more money is always annoying, but have the understanding of why. It's a different exposure intrinsically. The expectation for losses and the historical loss experience is significantly different on a house with a person or people living there than one that's empty. Guess what? That's why the premium is more money, because they see more claims happening. Things happen when properties are empty. And this is the same for residential properties and commercial properties. Commercial insurance actually have specific language built into a lot of the policies that say different types of coverage falls off if the property is vacant for a certain period of time. Speaking of which, time again for another quick break. We'll get your questions when we come back. Insurance Hour with Karl Susman. Stand by.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Greg.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here and learning about insurance with me today. Phone lines are open. Give us a call at 559-656-0317. You can call or text that number, or shoot us an email to questions@insurancehour.com. I want to make a quick note before I go back and start answering more of your emailed questions. I do the best that I can to give you the most accurate answer that I can, but I'm not perfect. I know, it's shocking. You thought I was, but I'm actually not.